Okay, as usual, we'll start with Bitcoin. And if you paid attention last week, first thing you'll notice is I changed the color scheme just to give me a better outlook. The white was starting to hurt my eyes. So the two things you could have taken away from last week were the entry model types. So if you had a piece of price action that was consolidating sideways, we look for the run down and then a push away, a retrace, and then a continuation. Now what happens here is usually where your entry would form would be at the lowest closing down candle in the range before the breakdown. Okay, this is a terrible drawing. Let me do that again. Right, so basically sideways movement, and then you get a breakdown of the range. Your entry forms, you get a push away, second entry, push away, right? So this is the model that we would use. This is a bullish case. Your entry would form at the last or the lowest closing down candle before the break, which we consider the true range or the true low, and everything that happened below it as a deviation to that range or a manipulation move, right? So this is one model that you want to keep in mind. And the second model I showed you last week was the model where you had early entries on a down closing candle, right? So if you had a series of down closing candles into a level, say the level was somewhere here, and you had a series of down closing candles, right? Let's do that, and let's do one more. And you could just reverse this for the bullish scenario. And then you had down closing candles with fair value gaps. That's terrible. Fair value gap here, a fair value gap here, a wick here. So you have a slight fair value gap. This was the candle that took the liquidity here. Let's call it there. And then you had an engulfing candle that came next, which did that. Right, let's make it a green candle. Now, you may have had structure coming. Let's look here, right? So this is bearish structure that formed something like that. And then you had the move down, right? And this was the sell side liquidity that the move took. Now, the candles that form to the low, let's just draw that out. You have these three down trending candles or consecutive candles, and you have a fair value gap in between it, right? Let's call that a fair value gap. For you to consider that a market structure has shifted, ordinarily what you would look for is this structure that formed here, and then you'd look for that to break the high. And then we would consider anything above that a reversal in structure, and that the market has turned from bearish to bullish, right? Now, the early model that I showed you was when you get an engulfing candle here that trades through the candle next to it, so the down candle that's next to it, and closes above the fair value gap here, that we consider an early entry or an early market structure shift, right? So you could reverse that for the bearish case. Now, with an early market structure shift, what you need to realize is that your next candle could do two things, right? Once you get a confirmation on the market structure shift, which is the next candle that forms after the candle that closed above the fair value gap, you can immediately buy that candle on an aggressive buy with your stops below the low. The second option is you wait for a retracement into fair value. So you could wait for something that does something like this, comes down here, it's a down candle, right? You wait for something like this, and then you take your entry here at the any of your PD arrays, and your stop would be here, and the same entry going up towards target or the drawn liquidity. Right, so just keep these two models in mind when we speak about whatever we're going to speak about now, right? Early market structure shift and the entry model that happens like this. Right, let's get rid of all that since we've got that out the way. Let's go down to a 15-minute really quickly on BTC. We had a low to the left here, and we had consolidation above it, and then a breakdown of or through that low. Right, you see it here now. You'll be wondering what the boxes I have marked off here. Basically, we treat this blue box as the range, and the box below it is actually one standard deviation below the range. So if I copy that box one lower, you can see how it projects the movement to the downside as one standard deviation of the range. So this is where your entry would form. Now, how would you know that this has shifted structure and is now going to reverse and go to the upside? So if you kept the model that I showed you just now in mind, we would look at this being the range. So let's get rid of this or hide this box for now. We would consider that this was the range before the break here. So we had this as the range here. Then we had a breakdown of the range here. Price then moved away and it came back here. Now let's look at, after what I just told you just now, why this happened and why that's possible. So we'll go down to a 5-minute for this, and I'm going to show you two of the methods here on how you could have entered or how you should be entering. Firstly, we're going to talk about market structure shift here. Maybe we'll have to go down to a 1 minute to look at this really well. And this is where you get your super early and aggressive entries on any piece of price action. Here, right? At this point, we don't know what's happening to the left of it. We know that we had a consolidation here and a breakdown. All we are interested in is what is the lowest closing down candle before the break of structure. So if we marked off the lowest candle here, and the lowest closing down candle would be here, we mark the open price of that candle going down to there. So this was the break of structure. We'll mark it off in red, and the opening of the lowest closing down candle. Now that's going to become relevant to you when price returns to it at a later point. This is where, between this area here or just at the opening price here, is where your entry is going to form. Now if we look down here, what happened down here, and if you paid attention to what I just showed you with the closing down candles, we see that we had these down candles form here. We had a fair value gap forming here. Once you start to see this, you need to confirm two things. You need to confirm that a candle trades through the down candle, which confirms it as an order block, and you need to see price closing above the fair value gap. So any of you here can tell me which would be the candle that I would most likely enter in. Would I enter here, first candle, second candle, or third candle? Any of you? I'll give you a second. I'll make it a bit bigger for you as well. Which of these candles would offer me an entry in this model? No one? Okay, let's move on. If you paid attention to what I told you just now, third candle. Jackson, that is entirely correct. if you paid attention to what I told you just now, to confirm the order block, you need price to trade through it, right? Price traded through it on the second candle, but that is not your entry, not on the 1 minute at least. Maybe on a second chart, it could have been an entry. On this particular chart, that is not your entry. Price traded through the open of the down candle to the left, which confirms that this is now an order block. The very next candle open is your entry. That is an aggressive entry. As soon as this candle opens, you are just going to buy, right? The safer entry would be to take a fib. Once, if price is showing signs of weakness or retracement, you will take a fib from the top to the bottom, and you will look at entering in the fair value gap at the top, or any other fair value gaps that form in a discount range that's below 50%, right? You don't want to buy anything in premium. Anything in premium here is considered above the 50%. You want to be buying in the discount area or the discount range of the fib. So if we had something from there to there, your discount is anything at the 50% or below. Now, there's oftentimes you would see that a fair value gap would form just above the 50%. We'd find that acceptable for an entry, and we would take that. So anything that did this would be considered a, let's change to yellow so it sticks out a bit more. Anything that retraces to the fair value gap is where your entry is going to form, right? Now, had you bought here aggressively, you can see what price started to do afterward, and it never went back, right? Can you see that? You would have gotten an entry here at 15,556, and price is currently trading. Hold on, let's have a look here. Let's look. Okay, yeah, we could have taken a trade from here. Let's go down, let's go up to a 5 minute so it doesn't look as messy. Right, bear in mind what I told you. You entered aggressively at 16,556, and this was the move that you got, and your exit would be the draw on liquidity. Who can tell me where the draw on liquidity would be here? What is a draw on liquidity? If you entered on a long, you entered somewhere here, where would the draw on liquidity be? You've taken liquidity here to the downside, which is the sell side liquidity. We've taken it here, we've taken it here with this move, and now we are showing signs of reversal. Where would the draw on liquidity be next? What is a draw on liquidity? Where is price most likely to go to next? If you're familiar with how price moves from imbalance to liquidity, liquidity to imbalance, right? That is just how price moves. Once we've taken sell side liquidity, price will move to buy side liquidity. Where is the buy side liquidity? Right, first would be here. It is where stops are being placed, here, here, here. And if you notice to the left, there is a fair value gap. Now, once price broke down through the low here, we have established a dealing range from the top to the bottom. This is a bearish dealing range since liquidity was taken up here first, and then price moved down. Now, we are calling it a bearish dealing range because liquidity was taken to the upside first, then the downside. If liquidity was taken to the downside and then moved up, we would call that a bullish dealing range, which means your dealing range is essentially where you expect to take, let's make it in yellow, from the bottom to the top here, sorry, to the top to the bottom. This entire range is your dealing range, which means you would look to short at discount areas, right? You get that? this is a level of liquidity in the market here that is formed. Let's mark it off here. This would have been a level of liquidity there, and the lows below it. And we also have a fair value gap that is formed there. So these would be your targets, right? So if you had bought down here where we had our initial entry at 15,556, you would have targeted here, and then you would have targeted inside the fair value gap to close the gap. Now this particular fair value gap is in the discount area of the range being from here to here. We would look for anything above the 50%. Let's mark it off here. Anything above the 50%, sorry, this way, let's do it this way. In a bearish dealing range, anything above the 50% is considered premium, and you would look to short it, right? So we can see here, as price moved above 15.7, we are now in premium area of the range, the bearish dealing range, and we'll be looking for shorts. Now, where is your invalidation for your shorts? Obviously, your one invalidation is up here on a bearish dealing range, but your next invalidation is your fair value gap here. This fair value gap is considered fair value for selling, right? There's your fair value gap there. It's considered fair value for selling. Now, if you look here, because this is going to make sense when I come to something else just now in with regards to BTC. If you had a level here, highs or lows, right? When you start to see price break through aggressively, like it did there, leaving fair value gaps behind, where would you want to enter your next position to go lower? Would you consider selling down here, or consider selling up here in the premium area of the range? Where would you consider? Bottom or top? It would be the top, right? You'd consider selling in a bearish dealing range at the premium area, and you would look for something like this, which is an imbalance created once price broke through a level, and this area is considered fair value for selling, right? There are other fair values for buying you can use when price breaks through something and returns to it. It's considered fair value for buying. In this particular area, we have fair value for selling, which means when price comes into here, you want to see a reaction out. So as price came in here, you want to see a reaction out. You are wrong above the high of the dealing range, and you are wrong early enough, if you catch it, if price starts to close above the fair value gap. If price starts to close above the fair value gap or the fair value for selling, you are wrong, because price is most likely going to do that. You want to see reactions of the fair value gap or the fair value for selling in this particular case, which we got there. Right. Say we sold here, stops above the high. Where would we target? On a retracement, only once we get a break in structure. You would look, let's look at this now, right? We would go to a 1 minute time frame. I can do it on a 5 minute if you'd like. Let's do it on a 5 minute, right? We now have the highest closing up candle here. When price trades through the low of this candle here, which closes the fair value gap that was formed here, right? I'm going to draw this fair value gap out in time so you can have a look at something there, right? There. And then I'm going to show you an easier way to do things. Let's get rid of the fair value for selling. Now, in this particular case, the candle was a very long candle. So what you would most likely to do, if you can't go down to a lower time frame, let's just go down to a 1 minute and have a look at whether we can refine that candle in terms of order blocks and market structure shifts. Right, the candle we are talking about is way up here. Right. So this was your fair value gap that formed here. This was the highest closing up candle. When price traded through it, let's zoom into that. When price traded through it was a confirmation that this is now a order block or an order block. When price closed below the fair value gap, the first candle that closed, which would be here, you could immediately sell, or alternatively you could wait for price to pull back into the level. And where did it pull back into the level? If we took a fib from the top, if we sold here aggressively, we would have been fine. We caught all of this move down here. When price returns back to the fair value gap that offered you the confirmation that the market structure has shifted, you will sell, which is here. So price went down there after confirming market structure shift. Price came back into the fair value gap that you used to confirm the market structure shift, and then it moved away. This area is in a premium area of the range, so you would sell here. Notice that there are no candles closing above the fair value gap. Right, got that? Let's look at what price did afterward. Price moved away to the downside. So if you had missed that entry, or if you were looking for a second entry, where would you find a second entry in this particular price range? You would look for a fair value gap. You would look for a fair value gap. You have your highest closing up candle here. So when price traded through it, we confirmed it as an order block, which was here. When price closed above the fair value or below the fair value gap was this candle here. This is the next sell, right? If you had missed that sell, you would look for price. Let's draw this out in time. Now, hopefully this works out for you, right? I'm going to draw this fair value gap out in time. Just missed it. Maybe because of the time frame that we are on, because there is a fair value gap that's just below it, somewhere there. Let's also look at the fib from the top to the bottom here. It's at the 70.5 again, so it's in premium, and we could sell there as price came back into that fair value gap, right? So I showed you two entries in here, and you'd also find the same model forming down here for the reversal, right? So we had a level of price. We had a level of price in a box. We had the run on the level. We had your market, all the good bits in here, market structure shift, validating the order block. We could have bought here and ran there, or we could have waited for the retracement back into the fair value gap that formed there and longed it back into this fair value gap, right? So all the same bits, which is basically the model is accumulation. Let's do this properly. Accumulation, failure swing, opposing run on liquidity, a push, a retrace, and a continuation. Right? Same model. You will see this model form everywhere, at highs and at lows. Right? Start to notice these things. And I want you to be aware of where your entries are going to form in this model. I told you previously that it's and we marked off a level below us at 15.5. It is the lowest closing down candle before the break, which would be here. Drawn out in time, you can see where your entries started to form around here in this level. So if you had done this and price came in here and formed here, that was your long, right? Your entries form at the true range low and not the fake or the manipulated low. Having said that, let's go back down to the bottom and see where price came to. Remember, from the model that I just showed you, this was the last opening of the last closing down candle before this happened. Where did price come to? Here. Now we don't trade the level directly, meaning I'm not taking the trade just because price came there. We're trading the reactions of the level and not the level itself. Just give me a second, I just want to check something. Right, so price, like I said, we wanted our entry to form at the opening of the last closing down candle here. When price returned to it, that is where we wanted our entry to form, and you can see we drew the line across in time, and this is where your entry formed. Now, how would you have entered in here? Again, we'll go back to our model on a lower time frame. So the level is hit now, but we are not blindly taking it because we don't know whether price has a willingness to run lower. So what do? We look for the fair value gaps coming into the level, which is here. All right, that's your fair value gap. This is the order block. The order block is confirmed once price trades through it there, and the market structure shift is confirmed once price trades above or closes above the fair value gap, which is this candle. We could immediately take a buy here, target the draw on liquidity here and here. Alternatively, if you are looking for longs, you could wait for the retracement. If you are waiting for the retracement, the idea is simple again. You let's draw your fair value gap out in time again and have a look at that. Let's take a fib from the bottom to the top. Where did your entry form? 70.5, the optimal trade entry on the ICT model. And you are going to be looking for anything below the 50%, which is considered discount for buying. And if we have a look here, we are in the fair value gap that we use to confirm the market structure shift. This is where your entry formed. Now, if you are afraid to take it on the entry here, so first entry was here, second entry is here. Where would your third entry be? Let's take a look at that. Your stops are always going to be below the last low because that is where your idea is wrong and your idea is invalidated, right? Your third entry would be when price trades through here, validating the order block, and closes above here. So this is the candle that closes above here. You would look for the retracement of that entire move. Same story, bottom to the top, 70.5 retracement, boom, take it. If price comes back to you, you take it, you take it. You can see how price is offered to you on numerous levels in time, here, 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 and here. And your stops are always going to be below the low. And let's see what happened next. Boom. You now took a trade from the green level here right to the top here. Why? You are looking for the drawn liquidity here, 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 and up here. Is that starting to make sense now? The entry model and the drawn liquidity. My target for this is actually 3.5 standard deviations of the range. So if this was the level that we had marked off, let's just clear up all of this now. We don't need all of this. I'm still going to use this and this. And this was one standard deviation below the range. Sorry, there. Oh, I think I had it hidden. Hold on. Let me just unhide that one. Where are my objects, ideas, notifications, order panel? I'm not too sure where my object tree went to. There we go. what's hidden here? I'll find it later on, it doesn't matter. Right, we are targeting 3.5 standard deviations off the range. So if this was the range, 3.5 standard deviations, if you look at this, it's 1, 2, 3.5. Right, that's the magical number to pull out of the market every single pip or dollar possible. I'd probably want to aim for 3 standard deviations, which puts us somewhere here at the checkered flag, and that gives us at about 17.5. Now, this is where it starts to get interesting, because we are at a level now on BTC where price is starting to compress or consolidate, right? You can see it there. Now, ordinarily, I would like to say that, first of all, this was my entry on BTC yesterday. Let me show it to you, right? Down to a 5-minute. There is a fair value gap in here. I'm going to pull it out in time. Let's just do it with this here. Right, it's a tiny little fair value gap there, drawn out in time. Let's have a look. There's the touch there, right? There's your touch here. We'll look at the confirmation of the entry just now. Let's talk about what happened here. You had price move to the downside here. So this is a 3-wave move coming into a fair value gap that's inside here. We had an initial run up here to a fair value gap and down here. So the same 3-wave move again. So we had a 3-wave move here and a 3-wave move here. Now the draw on liquidity for this 3-wave move is here. The draw on liquidity for this 3-wave move is here. You don't need a fib to tell you where the draw on liquidity is or where people are looking to take liquidity and then move price. So once you get a 3-wave move to the upside, you never ever put your stop below the middle leg. This is going to be a target, and you are going to be targeted before price moves away. Same story here. You have a 3-wave move to the downside. You are targeted, and then price moves away. So just remember that. Now, we can show you a lot of things that happen on the inside here. If we used the last down on the bullish side, we used the last up candle before the move down, which would give us somewhere around here. That would be your entry to short. The second is, if we went into here, we would most likely find a fair value gap or use this entire block as a rejection block there, and you can see how price moved away from it and continue to the downside. So we had price move away here, take buy side, take sell side, and then start to move away. This one was a bit of a F up and a tricky one because we didn't quite take sell side here. We maybe took something here, and price gave us a false break of structure there and then ran a bit lower. But let's look at the entry here now on a 1-minute. And I'm going to show you why sometimes the aggressive entry is better than waiting for the safer entry, which is the retracement, right? Right, let's go. Fair value gap formed here. In fact, this is not a fair value gap. Maybe on a lower time frame, you're going to see it as a fair value gap. This is actually a balanced price range because price traded quickly through the levels, right? It traded down, it traded here, it traded here, and it traded again here and again here. So this is a balanced price range. Your entry is confirmed when price closes above here and here. This was the candle that did it. You can see price pulled back into here, and then it just off to the races. Didn't hold back, didn't stop, carried on moving. Now the hope here on BTC is to get an entry. Ordinarily, I wouldn't buy consolidation like this because you can see that the liquidity that is being engineered is here. You can see it, right? Trendline liquidity, and you can see that there's liquidity being engineered here. We'll make that white just now. Let's just go sales trendline liquidity white, text white. Same story here. White, text white. Right, so you've got liquidity to the upside and liquidity to the downside. Now, in this particular model, I would not, ordinarily, I'd say, let's grab liquidity down here and then push upward. Maybe we get an entry in here and then we push like that, right? Everybody is waiting for this to happen. And if it does, fair enough. We take a fib from the bottom to the top. Here's your 50% at this level here. Here's all of your PD arrays that you would use, most likely the fair value gap that lies within here. This is a fair value gap here, and most likely where everyone would like to enter would be there. Now, just bear with me for 1 second, right? We have something else to the left of us, which was a previous range of selling or considered fair value for selling, right? I'm going to mark that off. This was the previous area of fair value for selling, which means when price came back into this area here, remember I mentioned fair value for selling just now. It was the breakaway candle here that broke the level here, created a bearish dealing range. When price comes back into it, this is where you're going to be looking to take entries and go further down for a move. But once you start to break above the fair value for selling and close above it and meddle around in it, this is most likely now to have continuation. So we're going to get something like this, and then you're just going to have a shoot up there. Right, so that's something to be wary of. In this particular smaller range, I wouldn't mind a push down, right? Because this is now giving us same zoom entry vibes. And if we go down to a smaller time frame, 15 minute, 5 minute, here we go, right? 5 minute. Here's the same entry forming again. We had consolidation here, a break below the low, a push away. We're looking for price to come back into here, so we can take that entry. Our stops are going to be below here. Where would we most likely look for that entry to form? It would be the opening price of the last down candle before the break of the move or the breakdown. This was the break. Let's make that yellow. Yellow. Let's make our fair value gap blue, I think it is there. It's gold. Okay, that's fine. Maybe we need to make this a bit lighter. It's a bit too much for the eyes. There. Right. So we are looking for our entry to then form at the opening or around the opening of the last closing down candle, which would be here. This was the lowest closing down candle. There. That is where our entry is going to form. And this is where we are going to look to take long. So if price comes back into this level here and offers us this, we would then look for that zoom entry model to form here, and then we'll bang the move up there, stops below here, and that's the play to take, because the target for this is then going to be way up here. Take the trendline liquidity that's lying here. The draw on liquidity is now going to be on the upper end of the world, right? 3.5 standard deviations, we are looking to get above here, here, and here. Once we get here, we can consider that maybe BTC wants to retrace, because now look what's forming here, and I just told you about it now. We have a leg up, a middle leg, and a push up back to the range high. Where would your liquidity then be? Anyone? Anyone in the chat? Anyone in the group? where is the draw on liquidity after this? So the draw on liquidity, for this type of three-wave move, you don't need to take a fib. If you wanted to take a fib, you would take it from the bottom to the top of the move. Anything below the 50%, you would look for premium discount arrays. We have one right here at the bottom. Price could go there. Anything below the 50% is considered okay. So I would look for the draw on liquidity after a move up like this to be down here. Right here. Take all the liquidity resting or engineered here. Maybe, just maybe here. Now, we have some other confluence, which is the weekly open here, pulled out in time. And the extra confluence that we have for that particular one, let's look at the highest closing down candle. I have it as this one. I think this one here. You could take the entire range if you wanted. The entire order block range would then be from here to here. Oh, hold on. Can you start to see how it's all the same thing over and over and over again? Break of structure, entry, retracement, liquidity, imbalance, imbalance, liquidity, right? Draw it out in time. Let's get rid of the fair value gap below that. Sorry. And this is where I would look for my next entry to form if we get a move on BTC that does, remember, we want it to come down here. We want it to go up here, start to fade away, and come down here for the liquidity grab, right? Form the model here and then continue. It would form in this area here, right? That is where your entry is going to form for BTC. Now, moving on to a daily chart, I'm going to show you something. Right, let's look here. We're going to take off or not show this on a daily really quickly or weekly. Same with the one below it. Nothing on a day, week, or month. Same with this level. Nothing on a day. And this level here, nothing on a day. Right. We have a fair value gap in here, right? I'm going to mark it off really thick and maybe in a color that we can see. So that's one. Make it there, and let's mark it light blue, right? And there's a fair value gap at the bottom here. There, right? Now, once price started to, let's zoom this in. This is a daily chart, by the way, right? Once price traded through here, we confirmed the order block. Once price closed above here, we confirmed a shift in market structure. So what does that mean? We confirmed a shift in market structure on a daily chart for BTC. Your job is then to look for fair value or discounted areas for buying. Ideally, as price comes down here, you're going to want to buy. But if we get the alternate where price does this first, we'll take it and look for the retracement there. That's the one we'll buy. And we are going to look for BTC to start doing things that it hasn't been doing, right? Or things that we are not used to seeing it do. Now, if you go on a weekly and we do the same thing there, we have a weekly market structure shift level, 17,169. Once price starts to trade above there, we have the order block confirmation, and most likely we would start to see a market structure shift form around that level there. Let's go back down to a daily. Now again, On a daily level, we have this huge fair value gap that is formed here. This fair value gap is on the bearish end of the dealing range. Let's go here. And this was the fair value gap before the break of the low here. Let's drop that down a bit, make it yellow there. So this area here would be considered fair value for selling. So if BTC gives us a retrace back into the 16K level, we would look at this area here to offer us fair value for selling. Remember, when this move happened so fast in here, it didn't offer enough order pairing for buy stops here and sell stops here. You could see some slight action or reaction around here. But what's going to happen here is you're going to start to get a fight happening in this level here. It's the fair value for selling of this entire range here, from here to here, right? We are on the discounted end of this range for a bearish structure and a shift downward. Now, where are you wrong here? You are absolutely wrong when price starts to close above here. When price starts to close above there, like that, just like you are seeing now here, it means that we are most likely going to start heading higher. Where is the drawn liquidity? Here, here, and here, into here. Right? But that's only once we start to break above here. Once we get into here and we start to see some weakness, maybe we can expect BTC to come back down here. But anything that closes above here takes us here, 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 and here. Right. Now, having said that, you had a break. Here's where the concept of fair value and fair value for selling should make sense. You had a break of structure here, or you want to call it here, right? You had a huge fair value gap in here. Now, once price broke structure like this, our job was to take a fib from here to here. Anything above the 50% is where we want to sell. We had a shift in structure on the lower time frame here. Fair value gap, order block validation. The drawn liquidity was here and here. Price came back into the area of fair value for selling again, right? Same as this area that I've got here, FVFS. We had an area here called fair value for selling. Here. Price didn't close above it. And here, same story. Price closed below here. In a lower time frame, you're probably going to see, let's have a look at it on a lower time frame, 4 hour. Once I get through these concepts, it's going to make much more sense of what I'm going to talk about when we run through all of the other pairs, right? On a 4 hour, not much happening here except a balanced price range. On a 1 hour, right? So we most probably could have entered here. There is an entry in here. I can see it. The drawn liquidity. First of all, this would have been fair value for selling here. But as price closed above it, you can see you'd cut your losses before you actually get to that point. This is the drawn liquidity here and here into the fair value for selling gap or block, right? Once you get into the fair value for selling block, there we go. Same story. Fair value gap. Price traded through the up candle here. and the fair value gap, you could have immediately sold this with your stop above here. Immediately. No questions asked. Sell it, put your stop above here, and walk away. And look what happened. Next one, let's have a look. Once we took buy side, then we took sell side, what did that give us? It gave us a new dealing range from this high to this low, and a new fair value for selling order block. Let's have a look here on a 6 hour maybe. I hope these concepts are starting to drive home. This became the new fair value for selling block there. Right, let's get rid of this one. Let's talk about that. Makes sense? Another fair value for selling block. When price comes back into it, this is where you are looking to sell. Now, if you go down to a even lower time frame, you're going to see your entry here again. Fair value gap or balance price range in here. This candle here trades through the fair value gap and the low of the down candle. You immediately sell here, put your stop above here, and walk away. Say you didn't do that. Your next entry on a move like this is going to be, let's look at this one now. We had the true level in the market, accumulation, failure swing, opposing liquidity run, the fake out or the manipulation, and then you had the push. The retrace is going to happen where are you going to look to enter? In this end of the world, you're going to look at the highest up candle. We could take the entire range, draw it out in time, or we could take just the opening price of the highest up candle here, or series of up candles. Here we go here. Now watch this magic. Right, we could have taken this one or this one here, right there. Doesn't matter, this, you could have taken the entire range here, draw it out in time. Here, so if you did that, this was your entry. As price came back into it, that's your entry. That's all you needed to do. Price not closing above previous fair value gaps. There, all of this is safe. You could have even put your stop there. Because once you start to see price close above previous fair value gaps, just as the fair value for selling model is, once you close above previous fair value gaps, then things come a bit more bullish in a bearish case here. So if I had a case of this being the fair value gap, once I see consolidation above the fair value gap, I am not looking to sell this with my stop there, because the next move is most likely to do that and not that. Right, so consolidation above bearish fair value gaps like this is a no-no. You're not going to look to sell that. You're going to look for an entry and look to buy that to take it higher. Right, so those are the concepts that I wanted to explain and drive through on this particular live, and then we're going to go and have a look at a few things. And even if we looked at the top of BTC in price and time, right? This was the highest closing up candle here. We could call this the price in time. Let's draw it out in time there. That is where your entry is going to form once you start to see the liquidity grab and the breakdown. There's your same story here. Let's widen it up. Now this is a daily chart, so the stops are a bit far away, but if we went down to a 4 hour, you could have refined this even more, right? Here's your fair value gap here. Here is the confirmation of the order block and the shift in market structure on this candle here. You could have immediately sold that candle and walked away. Notice how price is not closing above the fair value gap. This is a trait. This is the trait and a sign that most likely, if you are bearish in this case, price consolidating in your fair value gap and then moving away is a good sign, right? Price closing above and consolidating at your fair value gap, if you are looking to sell, is a bad thing because price is going to do that. Keep that in mind. You can go through the entire range of BTC and you'll have a look at everything that forms in time. The model is the same across time, right? There, push away, retrace, continuation. But notice now where this leg of the retrace happens, right? Once price starts to pull back like this, notice where the retrace happens in terms of market structure. Look to the left, look at the series of highest closing up candles here, draw it out in time, and now notice where your entries start to form. Right, so that's a whole lot of information and a whole lot of Bitcoin. I think from that we understand what the plan on Bitcoin is. Low time frame, we are looking to maybe get a push down back into these levels here, and then I'll look to long. If we start to see a push up, because most likely this looks like it wants to push higher, I'd like to see a run down on liquidity that takes this liquidity here, and then a run up, which would then give us this as the new dealing range. Any retracements back into the level at the 50% is something I want to look at in order to take the next move up if I don't find an entry to add to here on this push down, right? Remember, price does not move, price does not reverse from consolidation. So anytime that price is consolidating, you won't see a full reversal. You are going to see price consolidate, and you are going to see expansion. Idris, we can have a look at that. You're going to see expansion, retracement, and then move away. Or you're going to see price move away, move higher, do that, and then move away. Now watch how this becomes the entry model that we want. Remember, this is the consolidation here. We have the run on liquidity down here. We look for our entry to form here. As price moves away up here, we are going to take this candle and take it out in time here like this. And as price comes back into it, like this, this is where we're going to enter to take that up. Simple things, guys, simple things. Just understand the concepts of how price is delivered and how price moves. It's going to make things a lot more easier for you once you know that price moves from imbalance to liquidity or liquidity to imbalance and vice versa, and where and how your entry should form would actually help, right? My Ethereum chart is a bit messed up. Colors aren't so grand at the moment. I'm gonna have to fix this one up. Most likely do another stream for my Discord tomorrow once I have all of this fixed up, because this is just looking terrible at the moment. Right, but same story for Ethereum. We had the push up. We are now going to look low time frame for signs of reversal here, which is most likely happening. Right? Start to watch this now. Trend line. Lowest closing down candle in the range was here. Draw it out in time. That's where my entry is going to form. This is the break of the low happening here. Right, so we had the accumulation, failure swing, opposing liquidity run, push, retrace, continuation. That's what's going to happen. Right, so Ethereum may be showing us that this has the willingness to move higher from here instead of lower. So start looking for long entries to form on Ethereum. Even on the low time frame, you'll probably find something. Your entries are going to form around the yellow, which is there, right? You can see it. Once we get a shift in market structure, which we probably did get in this little bit here, if you go down to a lower time frame, I can see something happening in here. Break of structure, shift in market structure, order block validated. See how price is pushing back into it. Once we get a push up here, we now have a range that we want to come back into and take price upward there. All right, gold. Let's have a look at gold really quickly. Daily chart, let's switch down to a 6 hour. Let's go down to a 1 hour. Same entry model forming here, right? Now I have this as a break of structure from the top to the bottom here. And that would mean that we would be looking for retracements to come in to the premium area, somewhere around here, maybe somewhere around here, fair value gap there. And we want to see if gold is showing the willingness to go higher or lower. Any consolidations above here, and then we get a push higher, which I think we actually might just get. You're starting to see the model form here where we had accumulation, failure swing, opposing liquidity run, push. I'm looking for this retrace here. Once this starts to come back into the true level or the true low, which we have marked out here in time, that's going to be 1734. Aggressive entries, but like I said, we don't take entries based on the level. We take entries based on the reactions of the level. So you want to see something like that form, your entry form here, and then we take the long up there. Now you can see that gold has taken buy side and then sell side here. So buy side liquidity taken, sell side liquidity taken. What does that mean? It means that gold has formed a dealing range from the top here to the bottom here. Your job is to find an entry. You can use your premium or PD arrays on a 1 hour. Let's go on an M30. Have a look. We're not seeing any sort of fair value gaps other than the ones that I've marked off here, as well as the true level in the range here. So if price shows a willingness to get back up here to the opening of the order block, which is here, and in the premium end of the range, let's just draw that out. Then we'd be looking for an entry on gold somewhere around here. Somewhere around here. And we want to take that entry all the way down here back to the base or return to origin. Look for the reversal to form around here and then long it, because gold still has some steam left in it, I think. And let's have a look on the daily. Chances are the draw on liquidity is above us here. You can see it tapped into the breaker and then had a massive reaction off of it. So this would be considered fair value for buying around here. And we are targeting you have a bearish order block here and a previous high here, which is just below this bit of consolidation here. So taking out this would be the draw on liquidity. If it wanted to, maybe that, I'm not too sure yet. We'll see what the willingness for gold to do is. But overall, maybe we are looking for gold to go lower, because this has created a heavy series of equal lows to the bottom. And these will be taken because there's a shitload of stops and liquidity lying below there. There's also liquidity lying below there, and yeah, obviously down there. Right, so that's gold. Bearish maybe this week, bullish the following week, looking to take these moves, and then we'll look for a daily market structure shift there. I'm going to show you something on US 30. And this is going to make your life easier, because the whole idea on wood trading, and it's becoming more and more apparent to me every day, is price then time. Sorry, time then price. We are looking for time and then price. So this is NAS from the other day, right? Oh, sorry, US 30. I'm just going to put on the market session indicator that marks off all of my sessions. Mark off the Asian session in particular. Now pay attention to this, because you are going to do this on any pair you trade. Pay attention here. Two things are going to come out of this particular analysis. We have the Asian range, which I'm going to mark off here. The highs and the lows. But I'm going to mark off the candle body highs on a 15-minute. Right, candle body highs and lows there. Right, this is the Asian range. Let's make it black so we can have a look at it. That's the Asian range, right? Switch off the indicator for market sessions. Done. Maybe make this a bit darker. Right, that's your Asian range. What did New York do? Sorry, what did London do? London took the highs of the Asian range and then the lows. Right? When you have a case like this, where London takes the highs and then the lows, New York is going to do the opposite. New York takes London highs, London lows, and then off to the races. Now, where could we have entered and how could we have entered, right? This is a 15-minute chart. What you are interested in doing is taking the Asian range. Firstly, you're going to set your clock at the bottom here to New York time, UTC -5. You are interested in the range for Asia from 8 p.m. to 2 a.m. That is the range that you are interested in. Take your Asian range and project it one lower. So this is going to give you one standard deviation below, and project it 3.5 above. Right? But what I'm going to do for the above one is I'm going to take the extreme highs of the Asian range and the extreme lows of the Asian range. Just by some back testing, I'm going to show you how this works now. That will give you that, and we project this 1, 2, sorry, 2, yes. Oh, why is this so hard? Clone. 3 clone half, right? This is about half here. Right, so we have the Asian range. Let's make it yellow now, or red. We have the where we want our entry to form, which is 1 standard deviation below the Asian range. And our target is 3.5 standard deviations above the Asian range. Go down to a 5 minute. Let's look to the left. Is there any liquidity or areas or PD arrays to the left of us that would most likely hold price back? Let's look at here. Fair value gap there. Let's have a look here. We have this order block here, right? Let's do that. Draw it out in time. Demand supply zone. Right. Now, London took out the highs of the Asian range. Let's go down to a 1 minute for this now, right? Here's where it's starting to get interesting, because you're going to use the Asian range to project your entry and your exits. London took out the highs of the Asian range up here. It then came down into 1 standard deviation below the Asian range here. I took the long here. Now it's all going to make sense what I've been explaining to you for the past 1 hour, right, or more. There's a balanced price range in here, but you have this bigger fair value gap in here. Price traded through the order block here, so confirmed the order block at the bottom. Price closed here, confirming a market structure shift. I took the long here. Why? Because it fell within the 1 standard deviation of my Asian range to take a long. Now I closed my long up here. 1 standard deviation above the Asian range. I closed it here. Why did I close it there? Because, let me tell you how I missed the second move because I was busy. There are times to take note of in the market. 9.12 and 12.12. Especially if you're trading indices or Forex or whatever. Let's mark off 9.12. There, 9.12, and we'll mark off 12.12 for the sake of it, right? 12.12. There. Price, I closed my long because price was approaching 9.12. At 9.12, there's an algorithmic movement that seeks liquidity in the market. It will search for liquidity and then move fast. At 9.12, you are going to look for where the liquidity is taken. Go and back test this, don't take my word for it. It's here to the left, right? This low. You are going to set your stop at 20 points, $20, right? You are going to target $50 at least. Let's move that to the left. Do this every day, twice a day. Let's move this over to the left. enter at the break of the low or the liquidity that was taken. Set your stop $20 below and target 50. Now, if you put a few other things into consideration here, you would know that this still fell within the standard deviation of your Asian range here. All it did was take the London lows, and putting into context, when London takes Asia and Asia highs and then Asia lows, New York will do the opposite. So New York took London highs and London lows, and then off to the races. I would have exited there because that is 3.5 standard deviations away. Where could you have entered? If you didn't take it blindly like I told you now, with just putting a $20 stop and a $50 target, go look at that, 9.12 and 12.12 every day. If you didn't do that, well, then you would have entered here. Fair value gap. Confirmation of the order block. Confirmation of a shift in structure. On this candle, the very next candle is a buy. Alternatively, you could set an order in the fair value gap itself, right here. And I'm sure this would be in a below the 50%. It's actually the 61.8%. You could have set an order there. You stop below there. And this is all you could have taken. Let's have a look. Let us have a look. Because we were targeting 3.5 standard deviations, your move was from here. Sorry, let's do that again. From down here somewhere all the way up here, it was a $137 move. Some advanced levels, because I would wait to enter at the FVG. Okay, which levels are advanced, ETH? Which are the advanced levels that you're talking about? And which FVG are you talking about? Remember, I told you, I gave you two things I told you now, right? At 9.12, go and mark it off on a 1-minute chart. It will seek liquidity, and all you have to do is take a position when the liquidity is taken with a $20 stop and target $50. That is all you have to do. 90% of the time, your stop would not be hit. 90% of the time. You would have entered at the fair value gap of the huge candle. Yeah, you could have, that's how you want to do it. So this was your fair value gap here. You could have entered one here. But then you see, where do you put your stop? Your stop's obviously then going to be here, right? Here. You don't want price coming back below this fair value gap here. So yeah, go back and test that. That works. Look at 12.12, same story. Look for where liquidity is taken. You could have taken it after 12.12. The liquidity grab was here. Short position here. Stop at 20. There. Target is 50. Puts us about here. Right? You could have closed a bit earlier. there. Just understand the concept that I've just shown you now, right? Here you can just enter fair value gap, order block confirmed, retrace, boom. Just buy it. Stop's going to be below here. Now this move is not going to work all the time. Can someone tell me why this won't work all the time? Because a move like this only works once we've taken liquidity. If you try and do this and expect big things coming off of it without liquidity being taken, then you can't expect big moves to come off of it. Your idea would then be to take it to the drawn liquidity and maybe 50 points at a time. Like, look here, balance price range, confirmation of order block here, price tap back in, move down. Could have targeted here or up here, come out of the market. Reversal here, let's go back. Order block confirmation, market structure shift, retrace, boom. Right, so US30 in particular, I think it has an objective, and the objective is to get to, we're already above the inducement sort of liquidity above here. And the next, we have a fair value gap obviously up here and here, and liquidity resting above here. So as it is, or as it stands, there is no shift in structure to the downside. So we would be looking for longs, right? Let me show you how the market works in price and time. Take your range from here to here. Go and backtest this yourself. Project it 3 standard deviations below. Let's get out the this is 3 standard deviations, is 4.5, because this is 1, this is 2, this is 1, this is 2, this is 3.5. Right, market structure shift, confirmation of order block, sell, stop above here, target 3.5 standard deviations, boom, got the actual bottom there. This is the length of price from here to the first impulse. If we took it from here and projected it from the opening of the move down, it then gave us the move from here to here. If we then took the same candle, which is this, projected it from the opening or the last down candle upward, it gave us this. If we took the time of the consolidation from here to here and projected it here, it gave us more or less where this is likely to form here. Right. There's a few things that I want to talk about before I end it. I've given you all that you need to now go and do the analysis for yourself. I need to tackle a few things for my Discord, CRV, AAV, LTC dot. Right. Let's take a look here. I've spent a lot of time giving you tools that I'm probably not going to speak about again, right? So it's up to you now to use the tools that I've just given you to do the analysis that you need to do. Yes, it's uploaded to YouTube. Right, CRV, shift in market structure, confirmation of the order block, huge gap. I would like to see a retracement come in here, but most likely we're not going to see a retracement right now. If we do, it's going to come after. I'm going to get rid of these levels that I've had in time for a while now, because I think I'm just going to redo everything that I've done, because the downside has sort of played out. And we need to freshen things up now for any upside potential. Again, break in structure, where is our entry most likely going to form? On this particular one, it's going to be most likely, not most likely, it's going to be here, right? I'm going to look there. And lo and behold, this is where we are currently, there. If we considered this to be a fake low here, and this to be the real low, so this is the real low in the market, this is the manipulation of the fake low, then our entry on a daily chart is going to form where we are currently right now, right? So I would start scaling into CRV, and we have now, because we moved from here, taking buy side and taking sell side, we've got a few candles that closed below here. So this is now starting to look like a dealing range. If it's a dealing range, we are interested in what's going on from the very top to the very bottom. 50% puts us here. We have a huge fair value gap up in here. This is going to be a fair value for selling gap. So any shorts are going to be stacked up in here. Unless, of course, you start to close above here. I won't look for shorts, and then we're going to look for the drawn liquidity to be here, 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 and here. Because if you notice what's going on here, is that we have the initial move accumulation, we have the failure swing, opposing run on liquidity. We're going to look for the push up, we're going to look for a retrace, and we're going to look for a continuation. So stepping into CRV and buying any CRV here now, I wouldn't mind doing that, because we are most likely going to head for liquidity here, 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 maybe the top there. Who knows? Could fail halfway through. But what I would look for or at is, if this comes back here, is going to be obviously at the breaker here, and any other entries to form on the daily drawn out in time. The last up candle here, take it out in time. There, right? If that becomes a target, that is where you're going to sell and not look back. Right, so that's CRV. Start scaling into CRV. Not too sure we take this low just yet. There's liquidity, there could be a drawn liquidity to the upside, especially if we start to close above the $1 level. Then we could see this start to move here, because when you start to see fair value gaps not filled or not fully rebalanced, right? I'm going to show you an example now. Here, you see this fair value gap here, not rebalanced. Price created sort of an inducement before it here, then balance the fair value gap, what happens? Price is going to come back quick and fast and rebalance it, taking out all of this liquidity that built up here. All of the stops and liquidity that built up here is now going to get taken here, and then we're going to become or indecisive. But if we know what to look for, we know that something is most likely going to happen in the market that's going to take us from here to here, and then the retracement back into here is where we are going to look for our entry to form to take that up there. So draw on liquidity here, here, and here, rebalance the imbalance of the fair value gap, come down, form, push. Things aren't looking too bad in crypto at the moment. This is probably 100% move most likely to happen here. It's 150%. Drawn liquidity looks like it's to the upside, boys. AAVE. Gold, bro, gold. I literally just tackled gold, Usama. What you can do is go and have a look at this on my YouTube page after this, and you'll see what gold's about. Let's start off on a weekly. Right. Weekly is about to confirm the order block here, right? On a weekly. On a daily, have we done that already? Let's have a look. Let's go down 12 hourly. Let's go here, right? So we confirmed the order block here. We have a balanced price range in here. At the time, I think it was here. And price has moved away on AAVE, right? The true level in the market is here, so the opening price of that on the daily is there. 58.3 is where your entry is most likely going to form. Go down to a lower time frame and we could probably call it there, right? There's some imbalance or fair value gap here. The market may want to fill that in. So let's get rid of that. So we have fair value gap there. Entry on AAV around 56.5. This was the false break in structure. That's the move to take, right? 56.7. Draw on liquidity. Upside. You can start to see that this had some strength, where we had this as the accumulation, failure swing, opposing liquidity run, push, retrace, continuation. And on the higher time frame, then your higher time frame entry would then on a 6 hour form around here. So we're looking for this here, there, where that goes out in time. Your draw on liquidity is going to be right. So this became a dealing range again. There's your fair value gap for selling. Anything that closes above here is confirms some more bullishness rather than selling that's going to take us lower. I know we didn't take any sell side liquidity here, but we took it here, moved here, and then came here. So my expectation is that this may want to push a bit higher now, right? So relative equal highs forming in here. That's your draw. That's a draw. That's a draw. And anything below here still keeps the entire bearish structure intact, right? So if you look here, low, lower high, lower low, lower high, lower low, lower high. This is your actual dealing range here. From here to here. 50% of that is around here. You are looking to enter most likely going to be here. Right, take this order block, send it out in time. Let's take the whole one there. Right, so 190. It's a massive move. Not sure how that happens or how it can happen, but we'll take it one step at a time. That's where we would look for the drawn liquidity to go to. Well, let's see what happens. We need the shift in market structure to start getting some steam, right? Otherwise, coming here, failing here at the dealing range just gives us that there. LTC. LTC. LTC doing the mad things, right? Gonna delete this order block that I've had for quite a while now. LTC relatively strong, right? LTC was actually bullish, believe it or not, in June. Hindsight, in June it was bullish. Look at that. All right. Massive down candle. Fair value gap. Price traded through this candle win. This is a weekly chart, so maybe on a daily chart it was there. So on this candle here, this is when LTC became bullish because price closed above the fair value gap and traded through the down candle there. So that means that whatever happened here to here was the impulse. Here to here was the retracement. This was a stop run, and now it's most likely wanting to go higher, right? Let's look at that on a lower time frame. Again, your entry should be forming around the fair value gap here. If we were on a lower time frame like the daily, then things would be a bit different because we would then come here. Fair value gap here. Let's try and get this as accurate as possible. Here to there. Right. Order block confirmed there. Market structure shift there. Retracement long, stop below there. Price pulled back into the fair value gap, moved away. Let's take the fair value gap out in time. Starting to notice things. Look where the price pulled back into. Fair value gap. Price moved away. Price took. Watch this now. Besides the magical things that LTC just did and we didn't pay attention to, LTC has created a dealing range from the bottom to the top. This is 50%. Anything below here is where we want to buy. We do see that there's possible liquidity lying below here because this is not Let's just go a little bit lower. Retracement. So no liquidity grabbing here at all. So most likely I'd like to say that this comes back into the order block here on a retracement of some sort at some time. Takes the liquidity lying below here. But I don't think that may happen just now, right? Again, we have, let's look at this now. Because you are going to be found wanting because of this. You have fair value for buying here in this box. This is in the premium end of the range. What's happening here? This is premium. No one wants to buy that. But this was the high that was broken. This is the premium end of the range, which is a fair value gap formed before the break of the high. This would be your area for buying. Even if price just tapped this, it's good enough. 68.33. So you can mark that level off. That would be a fair value for buying area, and you look to buy there, right? Let's just call it fair value for buying. Right, that's that. And then the draw on liquidity obviously is to the upside. Go back to a daily. You have this gap that needs to be filled. Anything consolidating above it, you have all this trendline liquidity here. And this could take us, yeah, back here, possible. Equal highs before any failure later on in life to come back and take that, right? This is on the menu at some point. So we're going to look for that, create some relative equal highs. Remember what I told you. Let's look at this fractal drawn out in time and see what happened here. Highest up candle is here, drawn out in time. Look where the entry forms. There. Can you see that? Is this all starting to make sense? If you paid attention from the time I started, this is all going to make sense here, right? That's where your entry formed, which means when price gets back to that level, it's going to be sensitive and most likely do the same. So if we are saying target this for LTC, because you're most likely going to get a move away from there afterwards. We don't know how, we don't know why, but LTC coming back there would give us those relative equal highs that we would look to sell afterward, right? Right. Let's do dot and CHZ and then I'm done. I think I've been on here for like 2 hours. You guys should be tired of me by now. Live chat, nothing in the live chat. 1 hour 46 minutes. Nice. Okay. I'm telling you, you're going to have to go back and watch whatever I told you to understand the concepts that I've just told you. These are things that I'm never going to speak. These are things I'm never going to speak about again in terms of those concepts. In the future, you're just going to hear me talking about this candle and this down and that down, because these are not my concepts to go into in detail and teach. I'm just giving you an insight now, so when I talk about it, you're not left stumped and asking me what the hell I'm talking about, why am I drawing this candle out in time, and why is this candle so sensitive to price, and why did it do that, and why do I expect it when it comes back here to do the same thing? Right, what is the question, Itzy? A question about what I said earlier at the very beginning. Go for it. The example of where you asked us to enter, people said the third candle, correct? I'm listening. Now Euro USD. Right, okay, shall I open that? Let me go and look at that. Daily Euro USD. What am I looking for on the daily time frame? Right. What am I looking for here in particular? I think it's the exact same. It's I think it's the exact same pattern. Is there always the exact same pattern? It's a price is fractal. You're gonna see this everywhere, across all tradable things is gonna have the exact same pattern. Sorry, GBP USD, you want Euro USD. Sorry, my mistake. Hold on, Euro USD. There we go. Right. Talk to me. Tell me the things. Where am I looking? I didn't really understand what you said about those candles. Oh. So what are we talking about Euro USD? You think it's the same pattern, but from November 14th, I think, on the daily time frame. Okay. November 14th. Here. Those three down candles and then the bullish one. Yeah. So, simple. Daily time frame now, right? You had three bullish candles forming. Listen to this carefully. If you are bullish and expect price continuation, then you are going to expect bullish candles to form at fair value gaps. I'm not going to repeat that. You're going to go back and watch the stream and figure out what I just said. Okay? That being said, you have a fair value gap here almost. Let's have a look here. If we do even have a fair value gap. Tiny fair value gap. Yep. You had this candle here that both confirmed the market structure shift and the order block. So your job now is to look for retracements from the bottom to the top. Anything below the 50%, you're going to look for bullish PD arrays. Let's just go down levels. Bottom to the top. Anything below the 50%, you tell me what you can see. Any fair value gaps, balanced price ranges. Knowing that this level that I marked off here is where the confirmation on the fair value gap and the OB formed here, right? 103. Now let's go down a few more candles to a 15-minute. Look at the low that was broken. So you have this, and then price running away, which means the last down candle that broke the low was here. We have a series of them, so that's an order block. Draw that out in time. You could most likely draw this out in time. Now you have that. So most likely this is where these two black lines and the FVG here is most likely where your entry is going to form at this sort of bullish order block here. Make sense? There. Accumulation, accumulation, failure swing, opposing liquidity rung, push, retrace, continuation. You're only interested in buying on the discounted end of the range. That is below the 50%, anything here. Right? That's euro. Okay, now I really need to finish up here. CHZ. Maybe I'll squeeze in that GBP. CHZ on the daily time frame. Let's have a look for my boys. Right, low in the market before there. Accumulation, failure swing, opposing liquidity run, push, retrace, continuation. If that is, let's have a look here now, right? If we consider this to be the real low in the market, and whatever happened in here to be a deviation or manipulation in the market, oh, wrong thing, here, then we are looking for our entries to form at the black line and the opening price here before the breakdown, which is there, which is currently exactly where price is right now. And if you wanted to be more thorough, you could say maybe there, right? Now, what we don't like to see happen is we took buy side and then sell side, which gives us a bearish dealing range. Took buy side, then took sell side. Now we have a three-wave move to the upside. Let's just go down to a lower time frame and see if we can see whether this was a stop of some sort and now we're looking to long. If it is, say we are on the bullish side of things, right? This is your order block. You agree? You're bullish, this is your order block. Now, where would you buy here? Well, you should have been buying already. Let's have a look here. Let's get rid of your bullish order block. So we're in a zone where we expect price to reverse from. We have this tiny, let's just go lower, 1 hour, 4 hour. Yeah, better, right? We have this fair value gap. Price traded above here and confirmed there. We have now retraced here. Don't like how deep it came, but there's probably something in here that's messing about, right? Probably an imbalance of some sort. Now here we have another one. Let's draw this out in time. We have fair value gap. This is a long candle. Price traded through here, but we didn't have any closes. Let's have a look. Right, price traded through here, so we confirmed the order block. Price closed above here, so we confirmed the change in market structure shift. You'd be looking to buy in here, stops below here, and we're looking to long. So a long would be good. Al dente, long should be good there. Your stop is just below here, so, and it's in an area where you're expecting to take longs from, right? That zone that we marked off. If we go down to a 5 minute or a 15 minute, just to have a look at what the hell's going on there. Why did price retrace so deep? Right, these are most likely the culprits in here. Are most likely these tiny little guys here. There and there. Let's have a look. Yeah. See that? Magic. That's why I say price looks to balance imbalances or rebalance imbalances and then carry on. Now on a 5 minute, what can we see here? Reversal of structure again. There's your fair value gap. There's your confirmation here, close above. You are long here. Any retrace back into here at this particular level, let's draw that out in time for you, would be the next long entry to take. So if you're long already, that's fair, that's good enough. If you're looking for the next long entry, I think it just hit it here, I'm not mistaken, but that would have been it. 1735. Can you see that? These are not random levels in the market, guys. This is how it moves. I'm showing you things that should be blowing your mind right now. So CHZ is a good one. Sol Link, so many. Idris, what was that you wanted to have a look at? So I need to be rounding up here. I still have to upload this to YouTube link. Link's like one giant shit show here. I don't like Link because it is consolidating above some sort of order block here, which means that we most likely are going to, if we somehow get above, go above here, then whatever this order block is here and the 50% level of it is here, as price comes back into the 50%, this is where I'll look for confirmations on longs. But as it stands, this is asking to be ran down there. Take the liquidity line here, give us a reversal pattern here, and then we can probably go down long down here, right? So I'd hold on Link. I'll wait for more information on Link. Asking me to look at things I don't trade, Idris. Click off all these fair value gaps that we had here, any other levels we had. What are we looking for? Idris. Straight out the bat, relative equal lows, don't like them. On a weekly, monthly, let's go monthly. On a monthly, we had a huge fair value gap. There's no fair value gaps in here, but anything we can, and this took liquidity here, right? So let's start from here now. Let's start from here. Fair value gap, confirmation there, gone long, liquidity grab here, made relative equal lows. The fact that, I'm going to say this now, right? The fact, let's go down to weekly. The fact that this came down here like this and took whatever liquidity lay here and here, it means that there's no liquidity left below here. So I don't expect price to come back down here, and if it does, it's not going to stop here because there's no liquidity left below here. If somehow it comes back down here, it's going to go right down here, right? So if you're bullish on the GJ, it's fine. You can be bullish on the GJ. Let's have a look. You had fair value gaps or bullish order blocks formed. There's your bullish order blocks, series of down candles. You had wick, violent reversal. Let's look at here. You have fair value gap. Fair value gap in here. Right, this is on a weekly. Let's go down to a daily. There are some things down here that I'd like to see come back to, but most likely we aren't going to see happen. If you were bullish, extreme long term, you'd want to see price come back there, 159. Immediately, we can probably take a immediate trades this way. Look to be bullish from that level. The price comes back down there because you had all the good bits in here confirming a possible change in structure here. I don't like that this fell short here, so maybe you're going to see a point or something, and this is going to stop me from opening of this particular candle. Or is this the last one? There, right? Just watch that candle and the reaction around there, because you stopped before the fair value gap where your prices should be forming around and around here. If you are bullish on GJ, ask yourself one more question. Why are you buying GJ in the premium end of the range? Make sense? Why are you buying GJ in the premium end of the range? This is the 50%. You want to be buying around there, or any fair value gaps around there, which is here. We have a fair value gap here at the level that we are looking for price to form long entries on. At that fair value gap there, which is let's look. Why is this not playing the game there? So the 159, 157 level is where I would look. That's where I would look. If you're looking to short, then all you need to do is remember this was a 3-wave move. that broke structure here. You agree? Took buy side, took sell side. Now we are coming for liquidity here, which is most likely going to take it here. And remember this little 169.07 mark that I formed? We can form a box around it. Instead, if you are more interested in that, then you would be interested in this. This is where we look to short it. Right? Makes sense? Take the liquidity here. Let's remove this guy. Take the liquidity there. Look to take him to down here. And then you're still bullish. So you're bullish overall on GJ, but immediately not so bullish, right? You had this. You've got this. Now you want this. Your entry to form here and then move there. You do not want to be buying anything in the premium end of the range. And if this is the range, then you are in premium. Why do you want to be buying things on the premium end of the range? Idris, tell me. Right, that's GJ. Sol. I'm going to end on Sol because I've gone way over time now. Actually, I have work tomorrow. Euro USD link. Any questions you have, ask them now or forever hold your peace. What did I do with Sol? There we go. Shit. Sol still looks a bit like shit, but I remember us having this level marked off here. Remember I told you on LTC, let's have a look at something, right? Notice how this came back in time here and here. And LTC I showed you just now was almost the same thing, right? Now we are only interested in what's happening down here on a 4-hour. Get rid of all of this. I don't know if Sol's gonna make it in life. I'm not sure, but I think it can. Your entry is gonna form again. Opening price of the last down candle is there. Your break was here, and the manipulation happened below there. Balanced price range in here. Let's have a look here. Balanced price range or volume imbalance in there. So you confirmed and got all the nice bits inside here. Right, candle close here. You could have just bought here because you had a break in structure and, sorry, market structure shift and a confirmation of the order block. We are now looking for your price to form around here or an order block there. And if we take a flip from the bottom to the top, say we expect price to retrace, then you obviously you have fair value gaps forming here, down here, and one above it up here. Now I don't expect that to hit now. If it does, this is where you're going to be buying. If we are bullish on the, but on the other ones, then we are gonna now look down on, let's say, a 1 hour and maybe a 15-minute and see if right. So this became fair value for buying. Left the thing. I don't think it's gonna come back into here. If it does, it'll just wick into Yeah, I think we can attempt something here. I'm not a fan of it, but we can attempt something here. Let's have a look. We have all this liquidity building up here, here, and here, right? We broke the highs, did we? Let's have a look. Just about, right? So that gave us a dealing range from the bottom to the top. Let's call it here. Did we? No, let's call it here. From here all the way up here. Right. We took liquidity, we made a move up here, and we are consolidating here. Let's look at this level right here. So if we're looking to long, our stops are going to be below here. And if there's a draw on liquidity, it's going to be to the upside, right? Same structure as BTC, we're going to look here, and then finally we're going to look here. Because you have this, we have this fair value gap in here. We're going to look for that, and then we're going to look for that, right? Same structure as BTC. Squeeze up, three-wave move with the middle leg like this. There's liquidity lying below here. Grab the liquidity, reverse, and move. That's solve for you, and that is all she wrote, guys. The end of the stream, and there is nothing more for me to discuss until the next time. I've given you enough information now for you to do with it as you must, as you will, and go and be profitable. I'll post this up on YouTube, and you guys can go back and watch this, and we'll take it from there. Any questions before I leave? Thanks for your time, brother. No problem. Catch you in the Telegram group. So for those that are not in the Telegram group, the link is in my TikTok bio. You can find me there. And I do run a private Discord. If you are interested in learning more about these, then the private Discord is where you want to be. Because I devote my entire week to it, and you have more access to me basically. Right. Goodbye.